Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Kraken Pro. The good news is they have US listed stock trading for euros. So if you missed this Bitcoin move and want to convince yourself that crypto is still dead or you can't bear the pain of looking at green candles on the chart, you can become a stock trader. And over 7,000 US stocks now available in Europe. And you can merge the two great fantasies that DonAlt has, which is being a perma-bear and talking about the lost decade in TradFi markets. And that sick, perverted fantasy is now fully supported on Kraken Pro. I mean, realistically, we've talked about this. They have a ton of fucking licenses, huge legal team, and that just means even as a Euro, which is one of the worst places to be in the world recently as a trader, you get access to a bunch of stuff. Spot margin, perps, futures, stocks and X stocks, US companies, whatever you want. So if you want the show to continue and for us not to get fired, and in general, because it's a pretty good idea to diversify which exchanges you trade on and hold funds in, sign up to Kraken Pro via the link in the description, or leave us a comment that you already have a Kraken account so we can use that to cope, and we'll be super grateful. So, Don, I don't really know what we're going to talk about for this episode. BTC is still in this sort of 61 to 65k weekly range. We've been talking about the flip and when is it going to happen, if it's going to happen, and I'm sort of starved for content. But jokes aside, I was kind of thinking about how to kick off this episode given everything that has happened and is happening. And that sort of funny framing came to mind where I'm like, realistically, there are two questions that people care about. One is, how did you know? And two is, I didn't listen to you. What do I do now? I know you're especially a big fan of question number two and that whole premise. So if you could just give us your perfectly prepared, rehearsed answers for both of those, then maybe we get a 10-minute episode and the job is done.
Yeah, I mean, the problem is like both of those answers are gonna suck, but I'll try anyway.
Great.
I mean, how did I know? The answer is like, I mean, there's multiple reasons why I thought it was gonna go up. None is gonna be as satisfying as like, hey, I like this and this indicator just flipped this in this way, and it's just like, it's nothing like that. It's just like we came from monthly support and we were bouncing a little bit, and we were kind of like on the weekly time frame, we were pushing into resistance over and over and over again, as we talked about on the show, right? And that combination together with just how sentiment was on Twitter, and you saw me kind of like poke the beehive a bunch before this move, right? As in like I posted a bunch of like stuff that would get people upset if they were not long, and people got really upset. And usually when I see kind of like how people act, and having like a big audience, like a big Twitter audience, kind of helps with this, just because I can see the positioning not of the people that I follow, because those people usually know a little bit of what they're doing, but also the positioning of the people that kind of like follow me slash are just like in the market as a whole. And I just saw like the like very, very big difference between like us having hit monthly support and the chart just going sideways and the sentiment that was in the market. And like that combination of all of those things made me more and more certain that we're gonna go up as we went into that like into that week of like this week where we've been pushing up. And I generally knew that, like, given how the weekly had been pushing into that resistance, like it was gonna go quite aggressively the moment we get back into it. So once the daily started going, I was like, okay, this is gonna break and it's gonna teleport, and it did, like exactly how I've been talking about it and how I've tweeted about it. Just because all of those things combined just make for like an explosive move, and I didn't expect it to be to the downside unless something tragic happened in the trad market, which can always happen, obviously. But I was like, I'm pretty sure this is poised for upside, and that's kind of like the reasoning that I had for this. That's how I knew. You never know 100%. If I knew 100%, I would have like 100x levered longed at the bottom. I didn't. There's always risk to this.
Can you talk
And
about the
people,
timing piece of that? Because all of that sort of makes sense. You know, monthly support, you're poking at sentiment, volatility dries up, it keeps testing at the same level, etc. But arguably, it's been doing that for the last, 6 or even 8 weeks, depending on how generous you want to be. So,
yeah,
was there something
they,
particular there?
yeah, so there's a little bit of a difference to where we are right now to where we've been before. As in, like, we've had like a consolidation in February, March, April, right? That fizzled out with the Iran war. Generally, um, we had really bad news come in. We had Sailor Cell. We had like a bunch of things that happened at the lows that should have taken price much lower, right? And this is like one of my favorite kind of ways to gauge strength in the market. Is like you have all of these bad things come in and the market barely moves. It's the same argument that I used at like 16K, where I was like, hey, FTX imploded and we should have gone much lower and we didn't, right? Like we were trading at like 18K, FTX implodes, we go to 16K and then we go sideways. Like what's the deal here, right? Like FTX was the second biggest exchange, one of the more influential ones, especially in America. That being fraudulent is like the worst news that you can have. How the fuck are we not going lower? And the answer is because like there's just like sellers are so exhausted, like there's nothing left to sell, and the buyers don't really give a shit anymore. They're happy to buy, and that's kind of where we got to like in the last couple of weeks, where Sailor's just been selling. Like a lot of the down moves from the resistance at like 65 are just Sailor selling, right? Um, you have just generally so much like bad stuff come in and the market isn't moving. Like the biggest holder of Bitcoin turns into like the biggest seller, right? That's terrible. But price still kind of crept up. And then you're like, is this really something where like does this look like he's gonna get squeezed, or does that look like people are just gonna be lulled into being bearish at the bottom? And to me, it kind of looked at like the second thing. But it's all like all of this is kind of to say like you never know. I just could feel that something was coming, and I was reasonably certain it was gonna go up rather than down. But it could have been like a red candle to the downside as well. That would have been quite outsized. I just was like, I think it's gonna go up.
Well, I think that's about as much clarity as we can reasonably expect, given given the history of this show. And then, as to the second question, which is probably the more pertinent one, what
Yeah, that
now?
one I hate.
Right, that one you hate. We cover it on the show extensively. Every big move I think comes loaded with that question, which is like, okay,
Yeah.
whatever, forget it. Like, what do I do now? It's such a big move. I sort of put out a tweet related to this, right? Of the impulses that people reach for after a big move, and most of them being bad. And also, I think it's actually very timely, the episode we did last week and the week before, when it comes to momentum signals and signals in general, as opposed to sort of anchoring on recency bias and a bunch of those other things. But the reality is, at least in part, this move is both liquidation driven, but then also a lot of exposure now left on the sidelines, right?
Yeah.
People who got
Yeah.
chopped up during the range, people who got liquidated, people who just forgot crypto existed. And that's ironically in part of kind of why momentum works so well, because you suddenly have a bunch of displaced capital. One part of it is mechanical, which is the liquidations. Those are the sellers just getting shafted, and their liquidations definitionally turn into market buys. But then the other half is what happens up, what systems fire after a move like this? How many, automated strategies are rebalancing after a move like this? How many of them are adding exposure when you get an N-sized move in Bitcoin, et cetera, and that tends to be the sort of second breath, if it's not just like a mechanical liquidation move, and it doesn't appear to be, right? And I think the daily time frame tells that pretty well, where you got like the vast majority of liquidations were actually on the breakout day, and then the liquidations actually slowed down as the market kept going up. So most of the positioning was sort of pinned inside the range. And then you could argue that the first candle is like, okay, that's the liquidation run. Even though I hate that term. It's like that's the liquidation run, and the cascade is done, and now we'll see if there's any supply, and it should mean revert. But like if it just keeps going like this, then you sort of go beyond. I think that's when looking at stuff like open interest and the tape in terms of liquidations, or even just like the magnitude and quantity of liquidations, that's when it becomes helpful, because you can get a bit of a sense of essentially what positioning looks like after the wipe. And sometimes it looks very scary, like you have a massive move to the upside and you get a ton of liquidations, and then the market just stalls, right? And in that case, you're missing the second part of the equation, which is like, okay, the sort of mechanical move of the sellers being forced to cover is done, but surely someone's going to buy this thing, right? Like, we've cleared the supply, guys. Where are you? And then those are the ones that tend to be scary and drift down, and it hits a new supply block or whatever else. But this type of thing where it just keeps ripping up and it's far less liquidation driven, I think that's a pretty decent sign from a microstructure perspective, that's demand coming in instead of just sellers getting shafted. I guess in the simplest possible terms, you can go up when sellers get shafted, and you can also go up and keep going up if the buyers step in. And you get moves like this when both happen in tandem. Sellers get shafted and then buyers step in sort of additionally on their neck. That's when you tend to get continuation. And I think this isn't just microstructure slop. There is like empirical evidence to it. I don't know if you saw the ETF flow prints. Pretty fucking high. I think it was like, I mean, it was a lot. I can pull up the number on my phone somewhere. But like the ETFs are obviously piling in. And so it's this isn't just crypto degen. The broader point is this isn't crypto degens getting liquidated in the same range, and now it's just us left with basically the same market. From a flows perspective, it looks like a lot more than just that, essentially.
Yeah, I mean, it just becomes really hard to justify not holding any, right? Like after a daily candle, like we had from 64 to 69, especially with the context of having come from monthly support, like it's just very hard to justify not holding any. And then you have like, given this is like such a high time frame move, you have a bunch of people that are ready to position. Like that's the difference between these. And this is why I was kind of like, I don't think this fizzles out. Like if you have this kind of move coming in the middle of nowhere from nothing, I mean, fair enough. Maybe it's just a liquidation run. But if you have this kind of move coming from monthly support, I think you'd kind of have to be stupid to fade it. And there's a reason why, like I gave a lot of kind of like, okay, if this moves up, like what are the early signs? Like I made a tweet about like, hey, if we close above 64.5 or something, like that's an early sign that we're gonna get momentum. And then it was like above 66, that's gonna be like a late sign that we're gonna get momentum. And we got to close above 64, and that was kind of like still a little bit muted. And the next candle was all the way up to 69. And this is to answer your question of like what to do now. And like that was still fine to buy. I think even if you bought the close, that's the breakout trade. And now that we've had that two following candles, like now it's really, really hard, just because like we could retrace to 72 and still be hilariously bullish. I mean, we could retrace, I think, all the way back like to 70 even and be hilariously bullish still. So it's kind of like, where do you buy? And I kind of struggle with this. Like I cannot really give a good answer because the nearest support is 72. So like let's say 73. That's a weekly support. And maybe once this weekly closes and the next week, maybe there's like a little bit of muted price action. I'm not even sure that's going to happen, to be fair. And then you get like a support retest, maybe. But then it's the same kind of reasoning that I always use. It's like, why do you even retest? Like we're perfectly happy above that resistance right now. I'd prefer if it just went sideways here. So it's kind of like this. That's why I always say I hate breakout trading. In this case, you even got like a late entry on the breakout trade, but now that the move is like fully underway, like it's just like either you want some exposure and you bite the bullet, but you might just get completely dumped on, or you don't, and then you just hope that you get lucky at any of the supports that exist. But like, I hate both of those options. So yeah.
Yeah, I think the way momentum tends to work is sort of by definition, the question becomes harder to answer the longer the move goes, right?
Yeah.
The risk matrix is essentially some version of the more confirmation you want, the worse your entry will be, as a general rule. And the more, and arguably the more difficult your entry will be. And then there's a second tension, which is what you pointed out. When you start getting confirmation, it's only useful up to a certain point with a momentum trade. Because if you get too much confirmation, like it pulls all the way back to the breakout level, it might look nice from a price on the chart perspective, but in terms of the expected value or probability of the trade or the sort of signal that's being generated, at that point, it risks mutating from a momentum trade into something else. And that's what I think makes momentum trading functionally so difficult, but also one of the most misunderstood things ever, because people want the momentum trade insofar as I want big outsized moves happening back to back to back. But then at the same time, if you were to ask them, let's say they missed the impulse or missed the first leg, etc., where would you want an entry? Most people would point towards like a pretty big pullback, one that would risk actually invalidating the momentum idea as a whole. So which one is it? You want the upside of a momentum move, but you don't want to. But you also want to have a fantastic entry that perfectly pulls back to the level. You want to have your cake and eat it, right? Like, I want the huge green candles, but I don't want to sort of pinch my nose and buy once the signal is there.
Yeah, you don't want to pay for it. You just want to have it.
You don't want to pay for it. Yeah. It's like you waited for confirmation. Right, exactly. Like, it's like, what am I getting paid for, right? Like, you got paid because you took a ton of risk before there was a ton of confirmation. I think that's like a fair classification, right?
Yeah.
And then the more confirmation you get, why should you continue getting paid as much? Or why should you have the luxury of a really convenient entry if you're late to act on the signal and you've let the signal sort of evolve to that extent?
Yeah.
It's like, I think in really simple terms, it's really helpful to sort of categorize, and this has been my personal spiel for a while, but I think it's really helpful, and I wish someone would have taught it to me this way. You just need to categorize your trades into buckets, and then talk about what those buckets are in the simplest terms, and how you get fucked on those buckets. So it's like mean reversion. That bucket there is, I'm going to be precise and, trade within the range, and my assumption is that the range is going to hold. And I buy towards the bottom and I sell towards the top. Fantastic. What you get shafted on those trades when there's a regime shift or volatility expands, the range finally breaks. That's the cost of doing business. So you can sort of collect consistently harvest sort of profits from the market from pretty straightforward trading, knowing that at some point you're just going to have to eat shit because the range is going to break. And then if you look at momentum trades, and there is a bit of overlap between trend and momentum as well, but like, at least for the sake of simplifying it, you essentially clench your nose, and you buy the strong move. The upside of it is, if you're right, it'll just keep being a strong move, and you make a lot of money quickly, and you don't have to worry about your exact entry. The downside of that type of system is that by definition, you will buy the top a shitload of times in those types of false starts. And you'll also never have like a perfect sniper entry, because it's a sort of post facto entry style. Like, the initial signal is generated, it looks especially outsized normally given what came before it, and so you feel extra stinky buying that type of move, and so on and so forth. You could apply that to trend, momentum, mean reversion, sort of forced flow types of liquidation trades, volatility clustering, shifting from very low to very high volatility conditions, and so on and so forth. But I think that's just like such a useful exercise to understand, because then you kind of feel less like a dickhead when you take those trades, and you can abstract the trade to map to an actual signal as opposed to how you're feeling. And I think the biggest crux here is that these large moves tend to come by definition after periods of really small moves, right? And so when those really small moves are happening, you're really plugged into the low time frames, you're really plugged into the range that it's trading in, and then suddenly all of that is taken away from you. And I think where people get stuck is instead of being like, okay, regime shift, or at least likely regime shift, I need to take off my mean reversion goggles and put my momentum goggles on. It's very hard to do that. So I think a lot of people end up being stuck in mean reversion mode and sort of rationalizing and justifying the move in those terms, being like, oh, but it just broke out of the range, and oh my god, it's such a massive move, and it's 10% up from where I was just trading yesterday, so on and so forth. But like, I think that's a category error, because you're still wearing your mean reversion goggles when you do that. The correct thing to do is just fucking throw them in the bin, delete all your levels and your idea of position sizing and ATR, etc. And it's the thing I tweeted that I find helpful as a bit of framing. Just pretend you came back from holiday. Right? Pretend you just came back and that's the candle, that's the chart you see. What do you do in that case? Which goggles do you put on? And I think that's what's most helpful from not even from a what to do next perspective, but just from like a how do I come up with a trading, like what does it mean to have a trading system? Like I don't think a trading system is drawing a bunch of levels on the chart and then drawing 8 scenarios at every level about every single possible up or down permutation at that level. I think
that's
a trading
an system.
Yeah, well, true, yes. That is the system for social media following, 100%. But like a trading system, I think if I were to start today from scratch with some prestige style in Call of Duty, when you can sort of keep some shit in Call of Duty, you can pick one thing and then you have to level up. Back in my day anyway, now it's just like Fortnite skins and fucking slide cancelling and shit. I don't even know. But if I had to take that prestige token and pass it down to whatever future me who has amnesia, it would be this sort of systems-based approach. Just forget everything you think you know. You don't actually have a trading system. Like, what market effects exist? We know momentum exists. And there's like scientific literature on this shit, right? Like, I'm not making any of this up. You can go ask your clanker to read papers about this and then just keep saying, explain like I'm 10, and then go to 5, and then go to 2, or whatever the minimum reading age is. And you will figure it out. It's very doable, especially in the modern age. So like you'd start with what market effects exist, what do they look like, what are some proxy signals for them, and how do I get fucked by them? When they go wrong, what does that look like? And I think if you do that, you're just going to have just a way easier time navigating this stuff. Because if you interpret everything through like a mean reversion TA range lens, you will sort of by definition never be able to participate in like outsized moves. At most, it's like you'll be caught with your pants down on the outsized move, and then maybe if a range forms afterwards, you can go in and do some business. But like the big stuff, and this is one of my core beliefs, people enter crypto specifically for moves like this, right? It's the outsized massive momentum and trend effects that last weeks and sometimes months. That's why people are in crypto. If you're in crypto to trade like intraday mean reversion, I think there are better markets for you. Like I genuinely don't think that's the point. So with that in mind, just go away and ask yourself, do I have a robust system for dealing with outsized moves, shifts from low volatility to high volatility, momentum and trend? And like, what does that even look like? If the answer is no, like you've got your homework. And if the answer is yes, then I mean, you're celebrating with DonAlt or whatever. I know it's a boring, monologue diatribe, but it's especially these types of moves that make that super clear. And I also thought it was worth some time elaborating, specifically because this is the type of thing we talked about in the last couple of episodes, where it's to do with signals as opposed to either TA lines or looking at where the market was a week ago versus where it is now, and so on and so forth. So I've answered no questions, I've wasted a bunch of time, but I feel slightly better if even one person goes away and is like, you know what, I'm actually going to go do my homework and like ditch these random squiggles and boxes that I have on the 5-minute time frame. And I'm going to think about the market from first principles. I think that's that would be a very desirable outcome.
Yeah, I mean, our teachings, quote unquote, have landed somewhere, because I do see kind of like my trading style more and more on CT, which is kind of fun. And your kind of like, I mean, your education system has kind of made most people that are trading now in crypto kind of like have their first steps and kind of build on that. So like it's at least been somewhat helpful. Just taking a couple of years, I guess.
Yeah, no,
which is
The
fun.
plumbers, bro, the plumbers' revenge.
Yeah,
we're so back.
Yeah, but just generally like looking at this, and I mean, like the important thing with these kind of breakouts is like, even like obviously like buying 69K on a daily breakout, like if you actually go off of the close, which I'm pretty sure I recommended not to do. I recommended just buying into the move up this time around. But even if you did stick to like, that's kind of like my usual rules. Like if I buy breakouts, like I want to see at least the candle close. So even if you stuck with that, like that's time to buy. Now we are up like infinite from that point onwards. So now you have to kind of like, if you don't find an entry, like, and you will not on the daily time frame anymore, now we have to either zoom out and look for higher time frame entries. That would mean that we probably would have to run a while longer and then pull back to like a level on the higher time frames, or you go and just go to the lower time frames, find like an entry on the lower time frames, and then pray to God that you don't get run over. And I think that's the only thing you can do at this point, if you don't have a position, which I think if you did this like at least somewhat right, you really should have. Like if you want to buy now, I mean, there was plenty of good reasons to get into the
Dude,
trade.
you know how I
even
know why
before
there
the
was an
breakout.
entry that was available on this thing? It's because I
Because you
fucking
got
got
it.
one. You know, I am
Yeah.
the most
That was really good, though.
overworked, useless, washed up, zero finger on the pulse trader ever in the current paradigm. And I even fucking tweeted it, you know?
Yeah.
And I was watching this thing after the huge liquidation candle just go sideways, and I'm like, listen, I just spent... I mean, first of all, just like the old school instincts are all triggering, right? Being like, outsized move, don't wait for a perfect pullback. You've seen this movie before.
Yep.
There's a decent, you know, it's holding up pretty decently after a move like that. It doesn't look Barty, so on and so forth. But then the other thing was, you know, as cringy as it sounds, I was remembering the episode from like a couple of weeks ago where I was like, by definition, momentum means you fucking hold your nose and you risk buying the top, and that's, you know, false starts are the cost of doing business, etc. And I was just like, I would look like such a massive prick if I then go on Casual Friday and be like, Don, I don't know, man, it was a bit fast for me, and I'm going to wait for the monthly close. I'm like, even just for ego show spite purposes, I will tweet and buy some spot Bitcoin, even though I'm sure this trade is going to go terribly and I'll mismanage it and either close it too early, too late, or mess it up in 1,000 other ways. I just sort of, I felt duty bound as a matter of principle, getting that out, because otherwise, even by my standards, I would be a mega LARP. You know, you come on this show, talk about like momentum, and you got to abstract the signal away from the candle and do all this like pseudo philosophical bullshit, and then it happens right in front of your face and you don't do anything. That would have been really bad. So I was like, you know what, I'm here, I'm getting pinged on Slack and a million other things as usual, but I'm like, I'm just gonna buy some Bitcoin and tweet about it and wrap it in some education, and also set it up in a shit post sandwich, which was fun, right? It's like shit post,
yeah.
and then it's real talk, and then another shit post, and naturally the shit posts outperform, right? Because you can never get away from that. But even that is a good example of like, dude, I did not feel good in the trader sense of buying just below 70K, 69 and change. Like it was literally during this ugly looking consolidation here. You know, it looks like it's after the blow off top, which is horrible, right? It's like, oh my god, this wick looks like a blow off top, and like it's the peak liquidation and so on and so forth. But bigger picture, I was like, well, this, you know, what do I expect? Am I going to wait for like some perfect structure to form? Am I going to wait for some, I think that was the consolidation. Did I? No, I think that's too good for me. I was looking at the first dip. Yeah, that was on the 19th. I was looking at the 19th of August morning. Candles, like right after the liquidation cascade, that pullback. I was too washed to buy that one, Don. Like I'm not that good. But then it gave me another consolidation. I was like, yeah, it's still sub 17. I think it's gonna push. That's good enough. But like that did not feel good, right? Because like look at the move that came immediately before it. It went from zero volatility and the market just ripped up, you know, roughly 6% more depending on where you count. If you want to go from like the base to the high, it's like, you know, 8-9%. After the liquidations start slowing down, and like I'm just buying that. That does not make me feel good as a trader. That doesn't feed my ego of like, oh my god, a lot of people are already celebrating this and I'm their exit liquidity. Don was so early and all this other stuff. But like, dropping the ego and actually applying the stuff talked about on this show and just in general, being like, I'm buying here because I think the next candle is going to look sort of basically like this one, right? Or the next two candles are going to look very similar. And I think it's just a really good snapshot example of what like a stinky momentum trade looks like. You don't feel good about it. The market's up a shitload. People are already celebrating and you're there like, you know what? I'm late, but it's late relative to the range, not late relative to the regime. That's sort of the differentiation that I would make. So for all of you who sort of missed this, as bad as it sounds, you should feel bad because I'm the worst trader I know and I still managed to pull my finger out and get an entry. So for those of you who listen to Don's shows especially, like there's no excuse for this type of thing. In terms of where from here, what next, I basically agree. Like it's really hard at this point. Your argument was you either let it go further and then wait for a bigger pullback, or try to get in on some short-term intraday correction, right?
Yeah.
I mean, what other option is there realistically? And dude, even the consolidation.
Close your eyes, buy. That's one option.
Close your eyes, buy. Yeah, that is.
And it's gonna feel even worse.
Yes.
And the thing is, like, this is like one of the biggest weekly candles we've had in years. Like yesterday, I went through the chart, and there's only like a handful that even compete with this, even going back all the way to 2019. Like, there's not that much. So buying this is just like, yeah, you want to buy after something like that? I don't know. But also, like, usually when you get these big candles, like if you just go back in history and you see where they occurred, especially when it's after consolidation, it's usually like more upside. But like that's a tough pill to swallow because you could have bought like 20% cheaper just like 3 days ago. But I think like those are literally the only three options. Like you either just close your eyes, you buy it, you hope it goes up, you wait for higher time frame support, which would be 73-ish, or you wait for it to hit high time frame resistance, pull back, and then you buy there. But I hate all of these.
Yeah, they all suck.
That's why I always say, like, hey, I like buying. I like buying when it's slow. I like buying before the breakout happens. It's just like, to me, buying into that resistance felt much better than than buying now. And people always feel much better when the price is up more. Like they feel more bullish. But to me, like, I'm, as dumb as that sounds, I am now less bullish than I was before this breakout, because I saw the potential of this breakout before. And now that's played out. So that's taken off the table. And then now we'll wait and see. I'm obviously still bullish, and I think we're gonna go higher, but like I'm not gonna, and it's just how my brain works. Like, I'm not happy buying something when I'm less bullish on it than when I'm more, especially if that is like if I'm more bullish on it when price is lower. Like, that's just stupid. I know people don't think like that, but I just that's kind of the lens that I look at the market at. Like, that's kind of like how I perceive the market, more so than, yeah, it's up and everyone is getting rich, so I want to buy too. Like, sure. For me, that is not necessarily how
I mean, you've
works.
also, in that example, you've got like pretty obvious post-nut clarity, right? Whereby you're anticipating this breakout and you're positioned for it, but then it hasn't happened yet, and then the breakout happens. So at least part of the thesis is satisfied. And per your tradition and legacy, you have to sell this thing early. You have to panic over something stupid.
Yeah, and I will keep this for a couple of months.
I do have the tweet here, Don. Just for the record, I'm not selling. Come back to me in 3 to 6 months, and then we can talk about it. Doesn't matter where price goes. I won't sell unless a couple of months have passed. I just want to point out that we went from 3 to 6 months to a couple of months in one sentence. The timelines are already constricting. Tomorrow it'll be 1 week.
Yeah, so no, I kind of look at this like a monthly move, right? Like you just throw up the monthly chart, and we hit support and we bounced, right?
Yeah.
And we had like it looks like a big monthly candle, but it's not crazy, and there's more room to go. and I'm not gonna be closing this like now that we finally, like, this has been like it obviously in terms of the daily time frame, buying the breakout right now is quite late, right? But in terms of the monthly time frame, it's not really. This is just like it's finally moved from support and it looks strong. So it's like we're a couple of days into a monthly move. So it's not so late, and I'm just cognizant of the fact that this is a monthly move, right? And like imagine you have 4 hour support that you draw in, right? And you're like, okay, I'm gonna buy there. And my target is like the range high or whatever. It doesn't really matter where the target is, but I'm gonna buy this support, right? And then you get a close at that month at that 4 hour support, and you get one candle that goes up, and you're like, okay, good enough for me. I'll close it. Like that's retarded. Like no one would do that. Like anyone that trades those time frames, like you get the close, you get like it moves up, and you're like, okay, I'll give it like 3, 4, 5, 6 candles, to see where it goes. Like it's starting to pick up momentum. I'm gonna hold it for like at least like a day, right? But in this case, because it's a monthly move, people think, okay, like, hey, I bought monthly support and we got a move. I'm gonna sell the first candle. But it's like that doesn't really make much sense to me. Like it's a high time frame support. You're not gonna be. Why would you be selling the first candle? You can have like, even if this is not the support that's gonna like, even if this is not the bottom, you would expect like a 3 to 4 candle kind of bounce after something like this, and that's kind of like what I'm looking for. Like just to see whether this is just a bounce, which would be like 3 or 4 months. We are like in the second month now, so like 2 more months to go. Or whether this is just full trend reversal and we just put in the bottom, which I think is possible. I don't think it's necessarily super unlikely that 50, 58, 59 was the cycle bottom this time around. But we'll just have to wait and see. And I think just even if you look at it from okay, this is just a bounce, like waiting for like 3 or 4 candles to materialize after hitting the support is just the reasonable thing to do. It seems crazy. Like it seems a crazy kind of thing to say, like, hey, I'm gonna like hold for 3 or 4 months because like it's months, but you would never do anything else on the lower time frames. And it's kind of like the same way you would trade it. It's just a higher time frame.
Yeah, for sure. That time frame analogy really tends to land because I think we just anchor to low time frames because it's a 24/7 market and we all get bored and that's what we stare at all day. But you know, there's nothing I can add to that precise example. You know, if you're buying an hourly, would you sell it in 5 minutes? If you're buying a 4-hour, would you sell it in 15 minutes, etc.? Would you buy a daily? Would you sell it in 1 hour? And you know, they don't have to be perfect matches, but it's the idea of your thesis being somewhat tied to the type of setup you're trading. And in this case, if it's a monthly, then if you're right, you should have reasonable monthly time frame expectations. Or even if you group it into buckets, it's like, well, if we've just come off historically low volatility, how long, and you know, then the market is seemingly picking a direction, how long would you expect that shift to last? And if the answer is 3 days, then I mean, maybe, right? But then also that seems a bit constrained. Like it's very jarring to create this sort of trade, the shape of a trade. And, you know, we sort of did this in the last episode where it's like volatility is dead, 60K absorption, all of this stuff is in the gutter. But I think we made a pretty like clear case that like whatever impulse comes next, if it's coming out of this volatility drought, in general, you don't sort of fade it immediately, right? And I think we talked about the 6K example at that point where it's like, yeah, 6K broke and everyone's like, oh, well, that's pretty bad. But, you know, 5.5 is a solid level. It's like, no, 6K breaking is like a much more seminal event than that. And I think, you know, this is by no means a 6K analogy, but the shape of the argument still holds where it's like, this is the first impulse out of a volatility drought. Like, let it breathe a little bit. And that's just the cost of doing business when you're trading either high time frames or large market effects more generally. And I think the second framing is kind of more accurate and helpful, because I think people have like weird mental blocks when it comes to timeframes. As per your example, it's just, you can manage a hourly trade really well, but the same setup on the monthly you can't manage really well because there's so much more drift and noise and interference. That's why, as always, I just prefer the buckets category of like, what bucket does this type of move fall into if you're right. And it's like, well, if you're right, then what does volatility plus price reversal of this magnitude after historically low volatility look like? And the answer is typically not like 1 day of upside or 2 days of upside. And you can do stuff, and again, with clankers, it's trivially easy. You can sort of, and this is by no means like either sophisticated or mega reliable. It comes with its own terms and conditions, but you can kind of eyeball and both model what, median, best, worst returns look like after a move like this, and then you can add some moving average context or volatility context or trend context or whatever else to sort of give you a rough shape of the type of returns that you should expect. Or in more simple terms, someone said, yeah, bro, it's like a monthly support, volatility all-time low, and then one of the biggest moves we've had over this time period in recent history. How big do you think the move is going to be? If someone says like, I don't know, bro, like maybe we can squeeze out 5%, you'd probably look at them like they're insane, right? But that's basically what you end up doing if you keep this either mean reversion or low time frame lens when looking at high time frame moves. That said, I do want to, for a second, step away from the pseudo-intellectual masturbation and add some levels to this baby. So
Okay.
I think, this is my view, I think below 65K, we're dead. Like first one out the gate, if you retrace this whole thing and get back below that level, I just think this will be one of the most cataclysmic scams in crypto history.
I agree.
So that's bad, and we don't want that to happen.
No.
The next level up, conveniently, is sort of roughly around my entry, right? The 69s, you can call it 69.6, you can call it 70K or whatever else. I think that's near the zone of no return. It's not as bad as 66K, but it's still pretty bad. It's like, hey, we've just given back. I mean, from that level up to the high, we've just retraced 15%. And we've fallen back inside the top side of the weekly range. And we've, at that point, given back 2 of the impulse days, right? It's very hard to make sustained momentum-based arguments if there's any acceptance. Certainly, I mean, below 72K, it gets a bit shitty. But like anything that gets below 70K, it's like, what are we doing here? Like true moves of the type of shape that you've sort of described and we're betting on, they don't give back this much and then still, come out of it looking particularly healthy. Normally, it just fucking rips your face off, and by the time it goes back there, like everyone's already dead anyway from higher prices. So that's the other one. So 66K, one of the greatest scams in crypto history. 70K, guys, this looks kind of bad, but we could still make cope-based arguments, right? I think 72, 73K as the weekly top side of the range. That one is where that one there is like, hey, it looks kind of shitty, but you wanted an entry, and here's like probably one of the last defensible ones that will make you feel less sick than other entries, but is kind of scary if it goes any lower. Essentially, those are literally, as I'm recording this, the 3 levels I have on the chart. Basically 65.8, 70-ish, and then 73-ish. And everything else is sort of low time frame consolidation slop with the stuff that's below us. Let's get your take there, and then we can talk about what's above us afterwards. Do you agree? Do you disagree? Do you have anything else?
No, I agree. That's basically it. I think 72, 73 is excusable. That wouldn't even be like, I don't think it would look too bad to me even going there. But if we close below there, we are very quickly into the 70 territory, as you spoke about. Like closing at 72, I'd be fine with. Closing below it, that would start stressing me out.
Oh, dude, that's 100% where I will puke and make some really bad financial decisions and have to move neighborhoods and stuff like that, And then I can already see myself coping. I'd be like, but we came so close to my entry and we closed below the weekly range. I thought we were going to accelerate, Like I've got the sob story playbook ready for that if it happens.
I think generally best case here, and this is kind of like how it historically goes after these kind of moves, we kind of just keep going up. of like for like the next 2 weeklies are kind of like up as well. Just kind of look to the left at 16K. The first big breakout candle that we had took us all the way to 20. I don't know if you found it, but then you have 2 more weeks of upside. Then you get the pullback, and that pullback takes you into the middle of those 2 weeks, and that's kind of like that. I'd be down with that. So
Sorry,
basically,
where are we looking again?
So 9th January 2023, 16K. The first impulse coming from 16K towards 2021.
Oh, sure.
On the weekly time frame. You have that big candle from 17.1 to 20.8, and then you have like 2 weekly candles following.
Wow, that took me way too long. Sorry, man. I'm with you now.
It's all good. And you have like those two candles up there. Like you have a little bit of a continuation, but that's kind of like already slowing down into like a consolidation of sorts. And that's kind of what I would like to see here. Basically next week up as well, the week after up, but both of those obviously less than what we have now. That would kind of take us, because you also started talking about resistances. Like I have a resistance on the weekly time frame around 89K. Like I just boxed out the consolidation that we had in December 2025. And that would take us there, and then like a little bit of a pullback, and then hopefully more up. That would kind of make most sense to me. I wouldn't really like if we start this off by having next week like immediately red and then maybe the one after as well. I'd prefer like rounding out to the top a little bit and then having like an orderly pullback. That'd be my preferred way of doing things here. And the structure looks strikingly similar to me. Like the 16K structure we had looks strikingly similar to kind of what we're doing right now.
Nice. So, I mean, you've segued to answering the next question in terms of like, I think the below us map is pretty clear.
Yeah.
It's on the chart right now, and we discussed it. And above us, I think, is a super interesting one, depending on your time frame. So, like, let's get the rug risk out of the way. Like, I think we should model the extremes, if that makes sense.
Mm-hmm.
We can model what the rug setup looks like, and then what the holy shit, how did we fucking get here case looks like, and everything in between is just like randomness, and we can start looking at lower time frames when we can sort of see if this move continues to accelerate. I think one of the rug risk ones is actually the monthly, the April 26th monthly candle. Which is around, we're above it right now. It's around 76K, which happens to align slightly above where the weekly level is. But if you look at it from a line chart perspective, the rug risk there would be this portion right now, and whatever acceleration happens, is the wick. And then the close ends up being below 70, what is that? 76, 77K. Let me actually just get it exactly on the line chart. 76.3, right? And at that point, you know, it's like an ugly close. It starts nuking. And then the risk there is that from a market structure perspective, this turns into a lower high and then just fucking pushes through everything and starts eating up the momentum. I think that would be kind of near the worst case in terms of like what's reasonably proximate to us. That this is actually just like an impulse that forms a lower high on the monthly, doesn't make a higher high, and we just all eat shit. And, you know, it chops back into the weekly, falls back within the range, accelerates through 70K. I've thrown up violently all over myself. And then we're back to talking about, you know, the 61 to 64K range, and that's probably going to fall out. Nuclear war, all the good stuff, right?
Yeah.
And then I think the tail case to the upside is quite simply just like hardcore momentum continuation. And the shape that would take would be something along the lines of sellers come in at basically the weekly high of 82. You could even cluster it out, right? Which I think I've seen on your chart before, maybe not recently. So we're arguably at the bottom side of that cluster now. It's the highest weekly close between, you know, 78 and 81. So sellers come in there, the market pulls back a tiny bit or consolidates, and then just fucking smokes them, right? It's another round of shorts eating shit. And then we start pushing into the monthly resistance, which would be the one we spoke about of the 82K, which is also where the sort of weekly high is. And sellers getting smoked at that high would then cause like a time frame cascade, right? Where it's like, this is the weekly high and it's the monthly resistance. If it pushes through that, I think like the entire market is offside. Like even more so than this initial impulse, or at least like comparably. And at that point, you would have the setup that we spoke about and actually didn't play out on this show, which is that broken supports generally don't turn to resistance. Last time on the monthly, it technically did, right? Like it, at least on, I mean, on the Kraken feed, it wicked it. I know on like the Binance feed, it didn't get there, but this was a rare example of very clean, broken, high time frame supports turning to resistance. Generally speaking, in crypto, when the market gets there, it just completely arse blasts those levels. And there are tons of examples.
It's funny though.
Go on.
It's funny because we talked about this exact scenario, and we were actually looking like, and I remember this quite clearly, like we were looking at the weekly and the monthly, because the weekly kind of broke out above resistance, above that resistance, which is like 78.5-ish.
Yes, for sure.
And so people were like getting bullish. And in that case, usually like these higher time frame resistances can do their job. Like when it's basically like a trap set up from a lower time frame, as in the weekly time frame broke out, people get excited, but you're actually trading into a monthly level that people might not look at. Like that in those cases, they tend to be better than, like, these retests tend to be much better than otherwise. And we actually talked about this like while it was happening on this show, which is quite fun. And that's exactly what happened. Like the weekly broke out into the monthly test, and then it just nuked. Just to say, we can give ourselves another pat on the back for that one. But I just look at this whole thing, and I'm kind of like, I don't think it stops anywhere other than like in the 90s. Like I'd be shocked if any of this, like if anything other than just like upside, and then maybe into like the high 80s, probably more likely the 90s. Like I don't really see a good reason to stop. I don't see a good reason for this to make like a lower high kind of thing. Like we should never have gotten here, like back here in the first place, unless this just wicks in the next 10 days all the way back down again and closes at 66. Which like if we close at 66, like that's gonna be horrendously bearish, and you can just close your trades and
log off and buy
them.
40. You know?
Yeah, buy 45. Like if we close at 66 this month, which is in 10 days, like legit just put your bids at 45 and just run away. Which I don't think will happen, but that's the only way I see this reverse, right? Cool part about that is that that's still above my entry.
Oh, must be nice.
So the worst case mega nuke scenario, and to me the only real way this turns around relatively soonish is close at 66 on the monthly time frame. I don't think, like, if we close at 72 on the monthly, that still looks stupidly bullish to me. If we close at 76, same story there. The fact that we kind of came back here is just like bullish to me. Shouldn't have happened
in like 3 days, dude.
Yeah. So like to me, like there's a lot of scenarios that we can draw out, like draw on the jar or just talk about. But I just like, that's the only reasonable bullish bearish scenario to me. 66, then it's over. Otherwise I'll be bullish. And I mean, yeah, I don't think there's anything really realistically good. I mean, there's 82K as resistance, like you said. Don't necessarily think it's too good. Just because, and the only reason why I'm saying this is because there's so much, like there's so many levels that you can draw from exactly where we are to 82K. That what basically happens, in my experience, is that you just break one, and then those people that tried like to time the top kind of get liquidated and get run over. And then the next people get run over because of those liquidations and because of those people getting run over. Like there's no real good level to hold the line. There's just like a bunch, and you're going to have like a bunch of people splitting, like thinking, oh yeah, that's going to be the one, that's going to be the one, that's going to be the one. And then I think they're just all going to get run over. And then you're going to get one more push into an actual good resistance, which to me on the monthly is basically like 94, like the consolidation of the 1st of January 2025 candle. I boxed that out. I think that's a really, really good one. I think from there on, we could get a nice pullback. Otherwise, yeah, I don't know. I'll just ignore everything personally, ignore everything on the chart. The only thing that really matters to me is that we close above 67 this month. On the weekly time frame, I would like to close above 72, like high 72s. That would be preferable. And then everything else is just like, okay, I think it's just gonna keep going up.
Yeah, that map makes a lot of sense, and I also like that monthly 93k. Underrated as far as cluster goes. We need a high time frame cluster tier list, you know,
Yeah.
S tier to D tier or whatever it is that people do these days. Are tier lists still a thing? They are, right? Or am I?
Yeah, they are.
Okay, thank God.
I've seen a bunch lately, actually, like water tier list.
Oh,
Stuff
nice.
like that.
Okay, I'd love to see what your YouTube algo looks like versus mine. We should do that at some point. It's a fun episode. I wonder if I mean, this is the worst time to ask this, but let us know in the comments if we should just do like an actual fun Casual Friday episode. Not that this isn't fun, but you know what I mean? Just like random life shit, interests, hobbies, politics.
People would love that.
Yeah, I'm sure people would love it. But you know, that's the final
people
form
would love
of
it,
this.
but then they would start backseating our lives, and the question is, do you actually want to do that?
You're right. You're right. But it might be cool to do as a special anniversary show.
We can, yeah.
I don't know. Let us know in the comments. But yeah, TLDR, I agree. Like if I'm sort of mapping the upside, worst case, as mentioned, is the monthly rug pull. It would need to be pretty fucking bad for that to be the case. In general, because I think it would need to stuff the monthly and stuff 72. Because if the monthly is a rug pull, you'd expect the weekly level below it to fail as well, right? Yeah. And that would be 72k. Like, start getting below that, I think things generally turn a bit sour. And then the opposite, more convex case there is that if you I've got the chart open right now on the weekly, Don, and there's sort of 78.6 as a weekly level, and then there's the monthly level at 82k. Right? Yeah. That's like the most obvious resistance on the chart. And that's why I think we're sort of slowing down a little bit coming into it, although not much looking at the intraday timeframes. But, that's where the more visceral low time frame reaction came from. So I think if you want another momentum kind of ignition effect or another catalyst, I think it would be some version of profit taking plus shorts pile in at around 80k round number. The market flinches a little bit, you get some degree of overconfidence, or in general, just like, oh God, was that it? And then it just smokes them. Like you get an open interest build up, it just smokes them, and you teleport to the next level, which is the 90s. I think that's what just to be clear on the extremes, those are what they look like. Monthly time frame rug pull that cascades us from 77, below 72, and just the whole thing starts to unwind, especially in the next 10 days or so. And then the acceleration argument is we've reached the quote unquote, this move is insane, but it will be somewhat sane if this resistance kind of caps the market type of level, and then it just smokes that. That's the acceleration argument that I think would fuel us into 90 plus. I think the latter is more likely, personally. Yeah. Like, at least that's fundamentally the shape of the bet that is being made here, that this is an outsized momentum move, and even if it sort of slows down for a week or whatever else, it's a shift in regime and conditions as opposed to a one-off anomaly. And from like a lower time frame microstructure perspective, some stuff you'd want to see there is, for example, open interest decreases at first as people take profit on their longs, and then it starts to increase as people pile in fresh shorts at resistance. You'd want to see the perp to spot delta or whatever funding rate start to come down. I mean, also, that's another thing, right? I don't know if you've looked at the perps side, but because of the super heavy spot participation, we're up here and like the market isn't that leveraged at all. Like when I eyeballed it, a lot of the funding rate stuff was baseline, which is insane to say, right? Like just wouldn't.
Yeah, after a candle like that, historically, you'd have people go full ballistic.
Yes, you'd have like perp-led froth essentially.
Yeah.
But we're not there yet. So from a microstructure perspective, open interest goes down at first as people close their positions. You get more open interest. You get open interest net or aggregated, whatever view you want, start to increase. Funding becomes more negative as the perp sellers are more aggressive than spot and the spot buyers, but you'd want price to go sideways or like sort of, you know, that drift it does, where it kind of just slowly walks up and you're like, where's the rug candle? Where's the rug candle? Where's the rug candle? And then it gives you a Jesus candle instead.
So yeah, that's kind of what we have on the 4 hour right now. If you
on
throw
the
that
4 hour, oh, that's funny, dude. I don't even know. There's like no red candles in this thing. It's even crazier than that. Yeah. But from a microstructure perspective, I think that's the look. It's been a while since I've traded low time frame flow. I'm never gonna LARP about that type of stuff. But generally speaking, that type of positioning is a decent precursor to a pop at resistance. Longs close, shorts open. They squish the funding down by being aggressive. Price diverges from that behavior. And it might flinch, but ultimately you want it to either consolidate or march up. And then eventually when it pops, all that built up open interest goes down and the market and price goes up, essentially. So if you're low time frame, tape, flow, whatever, watching, if there's any slowdown at this resistance consolidation area, basically in the 80s, that's what I would look for the next leg. And as for the rug risk, as mentioned, it would just mean we start getting a fuckload of red candles and start wiping out this move. What do you think, Don?
Yeah, I agree.
Fantastic.
I mean, it just generally, like, it couldn't look much better. Like this is the optimal outcome so far. Like I think like it's easy to kind of like I could easily be like, hey, yeah, I'm such a genius. I bought the bottom, now it's up a bunch, and now I'm gonna be like obscure about it and kind of make sure that I'm right no matter what. But to me, like, this just looks as good as it could at the current point in time, and I'm happy to follow my face defending that standpoint.
Amen.
It's just like, this is perfect. I couldn't wish for anything better than this. Especially given how many traps there are set up for people that think they're too smart and can counter trade a move like this. Like it's built really nicely. Let's hope no wrenches are being thrown into this thing.
Nvidia earnings next week. Listen, I've got a whole bag of tricks for you, Don. Don't worry.
Nah. We have decoupled, brother.
We're so back. Yeah, that part is. I'm so glad we can stop pretending to care about the Strait of Hormuz, at least for a little bit.
Fuck all of that. Let me be someone that trades JPEGs and coins and silly stuff again, rather than trading fucking oil
and macro and
and dollar, euro, or dollar Japanese yen. It's like, fuck off, dude. I just want to trade
the carry trade, bro. Please, bro. Yeah, it's funny how quickly that dissipates. We should talk about a few other things as long as this episode has already become. And if you haven't already, please leave a like on this video. And our upgraded production value. You know, we've got captions and thumbnails and chapters. It's unrecognizable, to be honest.
Yeah, it's not like we've run this show for like 10 years at this point.
With zero technological progression.
Yes.
ETH, I'm on the weekly chart, Don. I don't know if that's the best place to start, but one of the sort of...
Monthly is the best one.
You want the monthly? Okay, we're on the monthly. So a couple things we talked about. One is this... And also, I have zero ETH exposure. I'd mentally sort of written it off as being just far less interesting than everything else. Very loudly on this show, to my great chagrin. I don't know. CHAGRIN. It's one of those words that you read but never say out loud, and when you do, it's on a podcast. But yeah, ETH BTC is up-ish, right? Certainly in the last couple of weeks. And then the ETH structure we talked about, and I will use the weekly time frame for this. This is when I was helping you sort of cope. And I feel like instead of helping you cope, I should have just been fucking buying.
Yeah.
But the idea was that, like, look, 1.5 ish. I think it was this exact diagram. I'm like, 1.5 ish is roughly the range low, right?
Yep.
2.6 to 2.8 is where you go to lose money in crypto historically, because it's one of the choppiest, worst ranges ever. And then the top of the range is sort of 4 to 4.6. And sort of the argument was, we took a stab below 1.7. It sort of held up. The midpoint is just a very sad place where dreams go to die. And if you're holding for a swing, it's towards the top of the range. And I think you were like vocally bullish ETH, maybe even before BTC or to the same. I've got you on mute, so it's pretty difficult to keep like an accurate timeline. Yeah. But ETH ETH ripped really hard.
Oh yeah.
And interestingly, on the weekly time frame, it's sort of ahead of BTC, right? Because it's above its weekly swing high, whereas BTC's weekly swing high equivalent is that same 82K level. So can you give us an update on ETH? Like, what now? Is it leading? What does it mean that it's a sort of this slight divergence where ETH is pushing through its high, but BTC isn't? ETH BTC. I think we've been very BTC focused for good reason, but obviously this is a big part of your thesis too, and this is one where I have no skin in the game whatsoever. So walk us through it, please.
So, like, starting from the high time for the monthly, I have the 1st of August 2022 candle boxed out. That's basically just like in between 1.7 to 1.6. That's kind of where we're bouncing from. It's acted as support multiple times. Like, that's kind of the range low-ish. I don't know if you found it.
I did manage to find it. You should just give me the price. I should know just via the price or whatever else, but I'm here sitting like an idiot with a typewriter. I've got the TradingView cursor and just looking at the date on the x-axis, going 1 month at a time.
I will give you the price next time, and then you will find the candle I boxed out anyway.
Yeah, for sure.
Anyway, like, we're bouncing from that and quite strongly, and I did have there's basically like the most important resistance that we had was those 2 monthly candles just recently in March and April at 2.25 and 1.95. Those, like, that consolidation before the recent down move, and that's the major resistance that we've had, and that like people have been worried about, and we've kind of like shot above that quite strongly now. So now all we need to do is close above it, and then to me on the monthly time frame, there realistically really isn't anything before the area of 3.7 to 4.6K, as in like all-time highs. So kind of like, I think we are kind of like bouncing from range low, and I'm expecting us to go to range high, which is 3.6 to 4K ish. And then if we're bullish there, maybe we go higher. If we're not bullish, maybe I sell. That's kind of like my framework here, just based on the reaction we got from support. And this one is a much better reaction than the one we got from Bitcoin, right? And that's crazy to say, given Bitcoin just put in one of the strongest weekly candles we've had in the last couple of years. But like, this bounce, like the first month, as in last month, July, that was a stronger bounce than Bitcoin had. And this candle right now is also stronger, and is also breaking resistances that Bitcoin hasn't yet. So ETH is realistically leading-ish. Obviously, when Bitcoin goes full, like just goes really hard, like altcoins usually struggle for at least a little bit, and that's kind of what we've been seeing on ETH BTC, like during this big move up. But it's actually holding up even better than I thought it would. Usually, like, it takes a little bit longer, and sometimes Bitcoin runs, and the USD pairs of some of the strong altcoins don't even go up until Bitcoin is done running, and then they bounce. In this case, we've seen all of them go up together. Just usually the altcoins a little bit less, but ETH had a massive move basically at the initial stages of this run. But anyway, like we're coming from support, like range low, and to me, we're going to range high, which is 4K on the monthly time frame. And then you go on the weekly time frame, and we've kind of been breaking the resistance that Bitcoin is struggling with right now, which is really good for both ETH and Bitcoin. I like to kind of like, and this is kind of something that I've done in cycles past. When you get like an ETH breakout above the resistance Bitcoin is struggling with, the chances that Bitcoin is going to break its resistance is increased. At least kind of like that's how I used to trade it when ETH was more relevant. Now ETH is a little bit less relevant, but it kind of like it gives me blasts from the past where ETH is kind of leading these breakouts and then Bitcoin just follows it. And I like that. And if we close the weekly above 2.3K here, to me, there's really not that much. Like everything else is just chop on the weekly time frame. Like there's been like so much chop around 2.6, 2.7, 2.8, like you said. I think that's just a washed level now. And on the weekly time frame, I'm also looking at 4K. So I kind of have like, I look at all the time frames on ETH and I'm like, okay, I think like 4K has to be the target, and then you can kind of decide where you want to, like what do you want to do, whether you want to bet on a new all-time high that the range finally breaks, because we've been in this range for a long time now. We've been in the 4K to kind of like 1K ish range since 2021. Like everything had its bull market, ETH didn't. So there's a chance it just breaks to the upside, and even if it's a shitty breakout, that would be quite substantial price wise, right?
I mean,
like,
we all know
if you
that
get it,
all-time high levels have been phenomenal resistance levels
yeah,
in this recent market.
yeah, and they have been, right? Like you look at 2025, and that got stuffed at the all-time high level, and I think if we go back there, there's a good chance it doesn't. There's to me, I kind of look at this and I'm kind of like, I'm more bullish than most people in terms of that. I think we can get to 4K, and I already know I'm going to be significantly more bearish once we get there than other people, because I think even if we break out, it's probably going to be like it moves like to 6-7K, and then we go back to 4, and it's going to look horrendously shitty. So I'm kind of like already like, okay, if this goes up, I'm going to be in the bear camp again. But for me right now, I'm like, I think it's gonna go to 4K. I'll trade that way, and then we'll see if it shows strength, and then I will hold into that shitty breakout that I assume is coming at that point.
Yeah, I mean, the best part is you say all of that, and then one guy will tweet something that you don't like, and you'll sell at 3.1.
No, dude. Like I mean, to be fair, like Ansem's been tweeting a bunch, and I mean he tweets all directions basically, but he's been like bull posting like whenever it goes up at least. So like that disgust is out of me already, where I'm like, okay, the person you like the least, it's not
Listen,
true.
he was pretty vocally bullish at the bottom.
He was.
You guys should just use this as a unification opportunity and make friends, get you on Market Bubble, all that good stuff.
Oh yeah.
Then we sign you up to FOMO, split your referral money. I eat, you eat. You know, I move out, move out of my parents' basement finally.
Yeah,
there's something here, Don.
We bundle some coins now that all the eyeballs. Like that's the funny thing is there's a bunch of people kind of watching what I do now, and that's kind of like the route that people do, right? Like they have like a successful trade, and then they start scamming people.
My favorite was in 2017, where it would literally take one good trade, and it could have been, you know, any altcoin on Bittrex, on Poloniex. It could have been an ICO. Like you have one thing that works, and the next thing was join my Telegram group, and the standard going price was 0.1 BTC per month. Which looking now, I mean, certainly at the top, that was some amount to pay for a Telegram group. On the ETH side, if we do a similar thing, also just one technical note, I hate the 2.7-ish and, you know, anything in the mid to high 2000s because it's been so choppy. But if there were a gun to my head, which seems a bit excessive given we're talking about TA, but if someone felt particularly strongly, if you both on the monthly and on the weekly go from like highest close to lowest close and try to sort of map a range and use a bit of discretion, you roughly get 2.7 as the midpoint for both
Yeah.
of those. And that's also the last cluster of lows before the market just sort of really broke down. I think for those eyeballing this and thinking, surely there's at least something resembling a useful inflection point between, where this is coming from and where Don argues it's going to. If I had to pick a candidate, it would be that.
Probably,
first note there. Although by definition, it's the midpoint, right? You don't diddle there. You need to either round trip your long like a real man if it ends up being resistance, or hold and feel clever if it goes through. That said, I think it'd be at least intellectually honest to talk about what the rug risk for this would look like, given we did it for BTC. I think it's fairly straightforward. Like, I think if the monthly closes back below, the monthly cluster, if you're being conservative, but I think that's really bad because you've basically given all of it back. Maybe the top of the monthly cluster at 2.2-ish. I know that's close to the market, but it does start looking a bit shaky if it gives back this entire second leg. You could always take the Bitcoin approach and just sort of use the bottom of the impulse, but I think that's really wide, dude. Like a 1.9 invalidation would be rough. So at least for me, and this is what makes it sort of slightly trickier, I think it would have to be 2.2, but with a slightly sort of wider buffer, knowing that we're at a breakout point and people ape too high on the breakout, then it can pull back a bit deeper, stuff like that. But it's certainly a bit less clear than BTC. And then on the weekly, it's one of those where we're at a breakout point. If that breakout gets stuffed, it's not necessarily the end of the world, right? Like, it can pull back after pushing in one candle from 1.8 all the way to the high. But if it gets like accepted below there, I think you're a bit like, don't love it as much. And you can sort of, 2.2 on the weekly is also a level, plus it's the top of the monthly cluster, plus it would be below the breakout point of 2.4-ish where we are right now. But I don't know, dude. It's a bit murky for me. Do you have anything better?
No, I mean, I would even still like it if it closed at 2.2. But that would I would think we're in for a little bit more consolidation at that point. Basically, like if we close at 2.2, I think there's a chance we go to like retest 2K again. And then just build like a base. And
but that gets pretty shoddy, doesn't it? Like, that's giving back most of the impulse pretty quickly.
Yeah, it's not the best, but it's also not something that would necessarily cause me to lose much sleep. I think generally, and it's the problem with altcoins and these kind of moves. I think if ETH retraces the entire impulse, then it's fucked, and otherwise probably just fine. As in like below 1.9K, like anywhere, like if it approaches my entry, as stupid as that's sounds, illegal. But like anything below 2K, I would not be too happy about. I would generally be not so happy if I gave back like 90% of that trade, because
imagine that.
It's a really good one. But it's I'm kind of like, I'm giving this room. I don't think it needs the room, honestly. I think this probably just keeps going. But I'm giving it room nonetheless, even though like I could probably be tighter with it, but it's like whatever.
Yeah. No, I think that's fair. It's always one of those tricky ones, right? Because you have to balance out the structure, like where it is technically, and then you look at where the base of the impulse is. And if there's a massive gap between those two, you kind of just need to make some shit up, Like, there isn't anything much more robust there. And then on the opposite end of that coin, that's not even a real idiom. In any case, the other side of the argument, given we covered the rug risk, which is just like full fucking retrace, the last 3 days were a mirage, right? That's what the rug case is, I think, both for BTC and ETH. It's like the last 3 days were a mirage, and we're just going to nuke continuously and stuff the monthly close. Like, that's the worst case scenario, which I think is unlikely, personally. I just think it's, consistent to map them. And then the acceleration, oh my God, we're so back, I think is actually just flying through this midpoint. You might get a bit of profit taking, and if it slows down around, the high, does whatever, etc. But then, the acceleration argument is the breakout here doesn't get stuffed. It creeps towards 2.7, which looks like the quote unquote obvious level, and then just fucking crushes it and teleports. Similar to BTC, right? It's like, oh, big scary underside retest. Is the market fake or gay, right? To use 2014 language. Sorry, that's insensitive, but nonetheless, like it's that type of premise. And then if it pops through the quote unquote obvious resistance, that's when you get into, oh my god, dude, 2 weeks ago we were at this price and now it's doubled. What is going on? Type of territory.
Yeah.
Cool.
Yeah.
For what it's
Okay.
worth, I'm less clear on ETH and I don't have an ETH position. I might try to dig one if it gives me something decent in the form of, I don't know, 2.2 to yeah, like the 2.2 to 2.3 type of area, just sort of gives back some of these candles without really breaking anything and without threatening the high time frame. But I'm also a washed up boomer who also only longed BTC as a matter of duty in principle. So I'll probably stay super sideline, seething and coping on this one. And then alts have obviously been on the tear as well.
Yeah.
Zcash is one. Let's go over the investable universe, which suddenly, Don, looks a lot more investable than it did last week.
Everything looks much more investable.
Pepe is up 20%.
Yeah, I actually talked about Pepe on my last show.
Of course you did.
Like,
You're farming your copy traders. How are you any different from the trenches?
No. And someone was like, "Hey, should I be buying?" That was before the ETH breakout,
right?
And that person was like, "Hey, you think that ETH is gonna break out harder than anything else? Should I be buying Pepe?" And I was like, nah. I mean, nah.
Oh, great. You just cost that guy his financial freedom. No big deal.
Yeah, and then I drew some levels. I mean, the levels played out, but yeah, I was like, nah, I'm not gonna. You can do whatever you want. If you like it, buy it.
Dude, that was a quote from the Dictionary of LARPs where you're like, the levels played out.
Yeah.
It's a classic turn of phrase.
Yeah, it's like you're trying to cope about having been wrong.
One we've used on this show as well, like the Hyperliquid Pico bottom. Right? Where it was like, yeah, this is an investable thing and 54 is the range low. Just take a stab at it. It's reclaimed it. Zero hype exposure. And then the Trump crime family pumps it all the way to the highs. So that's a fun one.
Hype is actually also one of the ones that I talked about on that show. I think I even throw like a long position on it, as in like I didn't take the long position. I put the long position tool on it.
I mean, that basically counts, right?
I did the same for Solana. I did that was like a very well timed show. Like I was just like, yeah, everything's at resistance. I think everything's gonna break out.
Nice.
Which like that's
I should start watching some of these shows. Yeah. I might get slightly better entries.
But no, going back to Zcash, I mean, we've talked about Zcash behaving stronger than it should, given at the resistance like that it was.
Yeah.
And that's kind of been playing out. Like that just looks really good now. Now that it's fully broken that monthly resistance from February 2018.
Jesus, man, yeah.
like that just looks pretty insane. It has to do a lot to come back below it. And if you keep that resistance on the weekly time frame, like it's quite neat how it just rested for the last 3 weeks on that, and then just full.
What price level is that on this feed? I've got that at 762, and it's below.
No, it's so we have like the monthly level is at 484. Basically the highest close.
Sure.
And then if you go on the weekly time frame, that's kind of exactly where.
Fine, okay.
And then went up. We obviously have like it's pushing into all-time high now.
Yes.
I don't really see why this would stop necessarily.
I mean, it's nice. We get to figure out and actually stress test the thesis of, are all-time highs still a scam in crypto? Because the last time we were at all-time highs, especially for like ETH and Solana being the main ones, we got scammed, right? Yeah. Obviously, BTC was in a completely different position, etc. But I think this will be a nice risk check for the market. Or, a G check, pocket check, whatever you want to call it. Being like, do you have the balls to actually blast through all-time highs properly? Or are we still in, walking on eggshells cowardice territory? And there are a few coins like that. Zcash is one of them. Hype is another. Lit, I think, and so on and so forth. It'll be quite. I mean, we'll get the answer pretty soon. Looking at some of these charts.
Yeah, and the thing is with Zcash, like if you just look on the weekly time frame, we have done that stupid as, okay, we're retesting all-time high and then it's resistance, but we've done it like a bouncing ball in a way. Like you remember the analogy from the 6K break where it's like the bouncing ball bounces weaker and weaker and weaker.
Yeah,
it's just inverse of that, where it's like you pushed against the resistance the first time we did it. It went from 700 to 180. The second time we did it, it went from 700 basically to 380. And now we're already back there. So I think like just given how this pushes up against it, I think that it's pretty likely to make a new all-time high. And actually like stick with it at least for a little bit. So that looks good. I don't really think there's good advice that we can give. I don't know if you have anything. I don't. It's just kind of like if you have a position, like probably just hold on to it unless we lose 484, which is like you give back 50% almost of the move.
Dude,
But
that's
like
the
that's
thing.
like
When they get
like
extended, your invalidations,
yeah.
if you're trying to be super technical about it and high time frame about it, they become useless functionally.
Yeah, it's a little bit of like a fool's game.
Yeah.
But I generally think like when you're in this regime, that's kind of how you have to trade it. And this is also why it's for me really hard to give people advice on where to buy it, because if you buy this right now, because it's pushing against all-time high and it's probably gonna break it, where's your invalidation? And the invalidation on a technical basis would actually be below that entire impulse that we just had this week.
Yeah.
And then it's like, okay, have fun buying something now. Your invalidation is 30-40% away.
Yeah, yeah.
And then your target has to be at infinite to kind of make up for that. This is why it's really hard.
And your position
really,
size
really
is going to
hard.
be tiny, etc.
Yeah.
I think that's true if you use like a strict TA-based approach, but there are other ways to proxy these market effects, right?
Oh, you can go
like,
lower time frames.
Yeah, exactly. Like in the dumbest terms, you can use trend-based indicators on lower time frames if you're taking it as a trending trade through all-time high, right? Even like a cluster of moving averages or a single moving average or a VWAP or something along those lines, but you're still like low time frame, like within a low time frame paradigm or under a low time frame umbrella. Same with like momentum. You can get momentum indicators on there and play those, even dumb stuff like RSI. If it hits the 50, it's a reset. This stuff sounds really dumb, but in this type of regime, using high time frame technicals is not particularly helpful for the exact reason that you outlined. If you look at like, especially on some of these altcoins, like, oh, where is the base of the impulse? It's like, okay, it's 40% away. And then the question becomes, is that a useful invalidation to then use for trade management and position sizing? And the answer is no. So I think you just need to switch your lens and be like, I'm in the middle of a high time frame move. It's already playing out. If I want to engage with this, I either just fuck off and wait, or I have to play low time frame games, right?
Yeah.
And low time frame games come with much more noise, much more uncertainty, but you also do need to play them on the low time frame. I think this is one where time frame mix matching gets you into trouble, where you're like, I'm gonna trade this high time frame breakout, but I'm gonna, I'm gonna trade this intraday as an all-time high breakout, but I'm gonna use a high time frame invalidation. And I think that's the worst. That's like the worst of both worlds, where you're paying the premium to sort of get an entry now, and you're playing the low time frame side, but then your invalidation for convenience or whatever else is the high time frame. So you have like your entry on one time frame, then your invalidation on another one completely in a way that doesn't cohere. So I think for a lot of these, as they start to rip away from their high time frame bases, you just need to decide if you want to play the high time frame game. You basically don't do it now because your invalidation is too wide. If you want to engage with the high time frame move, then you have to concede that because it's moved so much, using the high time frame for everything just isn't viable. So the context is that it's a high time frame move which you engage with on the low time frame with low time frame tools, and you just have to kind of embrace all the uncertainty and noise that comes with that, right? And the classic example is you get a low time frame trend break which tells you you're wrong, but then it just goes up after violating you because, hey, this is actually like a medium time frame pullback in the context of a high time frame move that took you out on your low time frame system. All of that sounds very convoluted, but I promise you it's like not that complicated. And also, well, it is, but it makes sense as presented. I think it stems from the principle that there's like no free lunch, right? And it's like the no free lunch here is you had the luxury of trading, well, not even luxury, but you had the opportunity to trade this all on one time frame, which is the high time frame. But now it's moved. So some things you can do on the high time frame, but other things you can't. And the price you pay for being late is being forced to use low time frame tools which come with more jitter, loud, more noise, lower signal, and just kind of more difficult and active trade management. So you can either choose to
Yeah.
play that game, picking your poison and knowing the trade-offs, or you can sort of say that, hey, I've missed this and I'm going to move on.
Yeah, I generally think like if you took this trade based on the high time frame, you can have your invalidation like on based on the weekly still, and I think that's fine. And you can move it higher based on how the next 2 weeks go. Also, like you can start moving it. But
But
if
bro,
you're
it's like
looking for,
30% away.
it's I think that's like let's say you entered at 400, you entered at 487 targeting all-time high breakout. Would you really want to go towards the 4 hour and then pick a new invalidation and get wicked out of it? I think at that point you're being a little bit of a cunt. If you're looking for fresh trades, it's a different
No,
story. But
exactly. Sorry, to be clear, that was the framing. It's the fresh trades type of thing.
yeah,
And I think it's that's a huge point, right? Like it's very different thinking about trade management tools and how much drawdown you're willing to stomach, etc. If you're already in a position, especially for this type of regime, versus you're looking for a position. My point
yeah.
was, if you're looking for a position, a 30% invalidation
Yeah,
isn't
no,
going to
no,
help
no.
you.
I 100% agree. Like that's why I keep saying like this, because I'm a high time frame trader and I don't really do like I look at the 4 hour on Zcash and I'm like, what the fuck am I supposed to do
Yeah,
with
you don't
this?
want to
Like
deal with this shit,
like
right?
I don't like yeah. There's a reason why I trade the high time frames,
Yes, yes,
and
yes,
that's why I'm like struggling so much to give like good advice on these, because like that's not necessarily the way I trade. Like when they're moving this much already.
yes,
Um, but there is ways to do it. It's just like when you zoom in so much, there's a chance that even if you get the market direction generally right, as in like you think it's gonna go up and it's going up, you can still lose money.
oh,
And you can
100%.
do that, like you can, and that's the thing with the lower time frames, where it's like you can be entirely right on where this thing is going and you can still walk away with zero. And that's the big risk that you take when you're trading these on low time frames. And you can see Zcash going from 700 to 1,500 and only take long trades and still lose.
Yes.
And that's the kind of thing that you have to be cognizant of. But also, yeah, like an invalidation 30-40% away, it's probably not going to work too well, because your position sizing has to reflect it, which means even if you're right, you don't make as much as you otherwise would like.
Exactly.
But that's the thing when you're kind of like being lazy, when things are initially showing strength, and then you just want to buy it once it's put in like a 50-60%
Exactly.
up candle. It's like, what do you realistically expect? And I think this is the same with all these altcoins. Like, what do you expect? Like you look at like something like Monad, for example, is one of the ones that I've talked about a lot.
Yeah.
Like the weekly candle is up, like from bottom to top, it's up 50% this week.
Yeah.
It's like, what do you realistically expect wanting to buy this now? Like, you're gonna have to like eat a shit sandwich one way or another.
Yes.
It's just a question of like
What fillings you get.
yeah. And generally like you obviously, like if you buy Zcash right now, like it could be that you just don't take a second of heat and
Yeah.
you're like right into the sunset and you're like, fuck yeah. But there's also a chance that it just pulls back a bunch and takes you out. So this is just kind of how it goes.
Yes.
I think it's the same for all the altcoins. Like they're all like the decent-ish ones, the ones that we've talked on the show, have all really performed like exceptionally well, considering that usually when Bitcoin teleports like this, they don't do so well. Like I'm quite proud with the stuff that we've mentioned and how it's performed. Like Monad's up 40% this week. Zcash is up like 50%.
Hype, pump.
Hype got a little bit on the lucky side, but
Sure.
still 40. It's hilarious that Hype got mentioned by the president and still up less than Zcash, and like ETH is up like similar amounts, and it's like, what do you mean? But yeah, like the ones that we've mentioned have all been doing recently well. I generally think like you want to be concentrating on these kind of assets that have been underpriced, that do something in crypto. I think it is the time to find stuff that is cool in crypto, and to kind of trade those rather than do the dumb stuff. But that's just
Yeah.
me.
That said, the plumbers are really back because XRP is ripping.
Oh yeah, but that's that like the reason why that is ripping is because people actually think it does something.
It's
Um,
funny. But
like
then it's like
it's
a
in the same.
Keynesian beauty contest, right? It's like, does it matter if
Yeah.
the thing does something, or does it only matter if people perceive it to do something?
Yeah, and I think it's kind of like in the people think this actually does something, so they buy it
Every single
when
bank is going to use it for every single transaction. They can't believe you're still fudding it, Don.
yeah. No, I'm not fighting it, man. XRP's been one of the best trades of my career at this
Yeah,
point.
dude.
And I am like I actually even there is a tweet out that I could dig out where I was like below $1 is where you should be looking at XRP again.
Oh, nice.
Um, and I mean that's bottom tick. I didn't buy it, so I'm not gonna claim clout on
So
that.
it doesn't count. Yeah,
Yeah, it
that's
doesn't
good though.
count, but yeah. So XRP, you have your coins and you have them all go up. It's kind of nice when you like, and that's kind of how the crypto market works. Like everything was bearishly retesting. Obviously, if the market would have gone down, everything would have gone down at the same time.
Sure.
Now it's bearish retested, and all of them are breaking out at the same time, which is just nice to see. Like it's a nice change of pace and change of
No,
mood
for
right
sure.
now in the crypto markets. And I one thing that I have painfully learned during my crypto trading career is that I don't fake these anymore. I have done that like when a mood shift happens. I remember the one that I remember the most was at like the first time we went to 6K. I got reasonably close to the bottom buys, and then it bounced to like 8K, and I was like, this is enough. Like we're still in the bearish kind of environment, and then it ran all the way to 11K, and I was just sitting there coping because it basically like did like a huge move without me. And that's kind of like, even if it is bearish, when the mood changes, when the mood shifts, it usually takes a couple of weeks at least to put in the highs. So that's kind of like where I think we're at. I find it kind of crazy that people are talking about selling at 3 days in.
Well said. Yeah, the vibe shift is definitely
Yeah.
palpable. That said, it's one worth watching, right? Because you can get some interesting. If your feed is set up correctly, you're not completely insane about it. You can get some pretty interesting confluence signals by looking at price performance versus mood. Like a classic example would be if there's like a 3% pullback and everyone turns mega doomer and bears start celebrating and you get a bunch of P&L cards from the usual suspects,
Yep.
etc. I think that would actually be a pretty bullish development as a sort of proxy or confluence factor, because that would suggest that people aren't exposed to the upside and they're sort of desperately cheering for the downside, which is a very imperfect, but if sufficiently set, if it's set up adequately, it can be a useful proxy for positioning. But I think it works the other way around as well. Like if things get insanely frothy in a very short period of time, and like every single tiny move up is met with mega exuberance that both shows up in sentiment and positioning, then maybe that it's going to be a bumpy road to use
Yep.
to use Kobe's terms. So that kind of stuff can definitely pop up. But I think that's more or less the altcoin universe, right? Like hype, push the highs. Did you see Athena? That's a crazy one. ENA.
Yeah.
Someone left their TWAP algo on. I don't know about you, but like if you look at some of the best performers, there's like a bit of dispersion happening where some of these alts just dumped so fucking hard that it takes less money to push them back up to more reasonable sort of mean reversion levels, right?
Yep.
They're just a bit less liquid, slightly thinner books, more market impact. So if you proxy purely based on percentage returns, I think a lot of those coins will be like historically weak / lower market cap / shittier coins. I personally wouldn't start there. And like, look, realistically, I don't know how much alt exposure I'm going to put on, if any. But if I were taking like a watch list curation screener, maybe we should bring that back. Let us know in the comments. Type of approach, I wouldn't just look at percentage returns. I would also just look at proximity to all-time high. Because I think those two factors alone are a more powerful predictor of future returns rather than like Because at that point I'm saying this thing has been strong and now the market is strong and everything is going up, as opposed to this thing has been weak and it got pushed down so much that now it's stronger than some of the strong stuff, but that's after a mega bout of weakness, if that makes sense. So I would, on the alt side, filter not just by percentage move, but also, as mentioned, proximity to all-time high, just so I can get like just so I don't get rugged on like mid caps and illiquid coins outperforming, and also just to get a more holistic view of strength. So both relative strength in terms of this shit dumped less, and then once I have that watch list, looking at stuff that's, close to breaking out, doing well, etc. And that generally leads you to the same or similar-ish suspects, realistically. Lighter, not really monad, sorry, not yet. Pump to a smaller extent, but especially Zcash and stuff like that. That's how I would set it up personally. Do you feel any differently? How do you navigate this? Oh my god, this coin is up more, and then you look at it and it's because it basically went to zero and then pumped.
Yeah, I 100% agree. Like you will see the memes, like a bunch of the memes pop like 20, 25, 30%. And you're like, holy shit, like the memes are back. And it's like, this thing went down 99.9%. It can bounce by just one guy buying, and it can go up like 50% by just one guy buying, like 100K, 200K sometimes. And it's like, that isn't necessarily indicative of massive strength. It's just one random dude buying it. And it's the same. Like it's illiquid on the way up and illiquid on the way back down again.
Yeah.
So you need to be very careful there to kind of mistake that for strength. Obviously, you can like this kind of the cool thing about like trading smaller portfolios is that you can take advantage of these kind of illiquid things, right? Like you can take advantage of the fact that like some of these coins will pump like 30-40% by just like tiny buying, which means that the moment you see buying come back, you can front run it with smaller positions and then dump it. But I think you should probably, like, I generally think it is important this time around to pick stuff that actually does something in crypto. You will see memes do reasonably well, I think, but I generally think if you don't time them well, you're probably going to lose money, versus if you don't time some of the stuff that actually does cool stuff in crypto, like if you mistime that, you're probably still going to do okay. So like if you're a really, really good trader and you just want to trade memes because you love them, fair enough. But otherwise, I think like if you're not a really good trader, you should probably stick with stuff that is actually cool in crypto, because the memes are going to be illiquid, like I said, on the way up and on the way down. So you're going to see outsized move to the upside, but also outsized move to the downside. And like I generally would like people to buy better stuff, but that's a losing game. Like it's a losing battle, I think.
Listen, Don, my portfolio, my choice. Okay.
Yeah, I mean, yeah, and I think that's totally fine. Like, if people want to buy memes, they can buy memes, and like people always kind of say like, "Hey, Don, you're trying to gatekeep," and it's like, no, I'm not. It's just like I see all the scamming that's going on there, and I see all the ways for you to lose money, and it's kind of like I'd rather see people avoid it, and there's other ways to make money in the space. As you can see with the watch list right now, I mean, there's stuff that is cool that is up more than the meme coins are.
Yeah.
And that's more likely to be sustained than the meme coin rallies. So
I agree. All right. I think that's plenty. Let's see if we get rug pulled. But otherwise, please go up, I think.
Yeah,
and
would be sick having a bull run for at least a little bit.
At least one more week, bro. But you can jump back to the earlier portions of the show if you want to see the specific levels. I think we did a decent job there. Before you click off, make sure to leave a like on this video and subscribe to the channel. We are firmly behind BTC now, and we'd prefer the parity to come from our channel growth rather than a monthly close stuffing. Thank you to Kraken Pro for supporting the show as always. If you want to keep these episodes coming and to trade on one of the longest running exchanges in the crypto space, do us a favor and sign up via the link in the description, or leave a comment if you already have an account, assuming you've left 10 other comments. Given I've said that leave a comment thing on at least multiple other things. That's all from us. I'm off to the club. It is 10:12 p.m. in London, things are popping. There is an Uber outside and people are in it. And we're going to a place with a table, and they're going to bring out a bottle. It's going to have that card name plate thing. The usual.
Living the life, huh?
Yeah, for sure. That's definitely what's happening. That's all from us. Hope you enjoyed this, and we'll see you next week.
Bye-bye.